Hey traders, it's Keith here. It is September 7th, 2021, and we're going to be looking at a bunch of different asset classes. It's kind of like a global macro perspective, although we are mainly looking within the US. We'll be looking at Bitcoin. We'll dive into the Bitcoin dominance chart a little bit, and then instead of just diving deeper into crypto, we're actually going to look at a comparison against Bitcoin, the S&P bonds, and the US dollar. And then we're going to look specifically at the US dollar and bonds. So we'll look at DXY, which is the US dollar currency index. We'll then compare that with the US 20-year Treasury bond yield, as well as the actual value of the bond, to basically understand how much fear there is within the market. And usually you see bonds increase in value because they are being purchased when there's more fear, uncertainty in the market, and you see them fall when you have more confidence, optimism, and hope in the market. And bond yields are negatively correlated to actual bond values, which definitely just makes sense logically. So we're first going to be looking at the price action of Bitcoin, and then we're going to be diving into the Bitcoin dominance chart a little bit. So let's take a look at a large time frame. We've already talked about the structure that we are kind of getting to this point, or how we've got to this point so far, so we're not going to dive into that. But the two main, or I guess the three main trend lines that we're looking at, if we're going to get a nice view of the chart here, and then we will get our drawing tools. So we have three major trend lines creating our zone of confluence. The first one is this previous horizontal level of support that we've seen hold not once, not twice, but three times. So great to see that buy pressure holding that price again after this long wick to the upside, or to the downside, sorry, with the price picking back up, holding that major level of support. So definitely nice to see from the bulls. Second level is this previous, you can see it was kind of a resistance right here, turned into a new level of support, and it's still currently holding, which is fantastic to see. So I'll try to draw that a little bit more cleaner. And then we see the previous resistance here coming in as a new level of support as well. We can see that right here. So we have three zones of support creating a zone of confluence, and we are looking at this potential zone as the possible bottom. Well, we definitely do not want to assume that it's going to be going straight up. I would expect some sort of structure, even if it's going to be a little bit descending, like from this zone. If we do make a series of slightly lower lows from this low to this low to this low, I still do think that we are going to be continuing to the upside here. So the main level that I do not want to see the price pass is going to be the 42-ish K level. And the reason is this would have the price fall back into where the neck is, or where the shoulder is for that head and shoulders. We can see the neckline right here. I do not mind it because this is such a major level of supply that we are all right with the price coming back closer to these levels, because we had such a very strong rally from the sub 30K zone all the way up until the plus 50K zone. We are going to have some pullback. I did not think it was going to be this aggressive, to be completely honest, but we still do see, if we're taking a look back at like the weekly, we're still making a very strong push, and we've had a little bit of a weakness here, but I do not expect that we are going to be just absolutely falling down here. I think we're going to be basically holding within this range right here. So that's going to be a new structure that we'll be forming. I did not think that would be this low. I thought it'd be a slightly smaller of a structure somewhere along the lines of here. Whereas, you know, if we do hold that zone, definitely would be the case. But that was a pretty big dip, definitely. But regardless, we are still holding. You see altcoins like Solana and others hold relatively well during this time of uncertainty for Bitcoin, and that's very great to see. So as of right now, I'm just going to be patient. I'm not really selling anything or really taking much action at this point. If we do start to see a structure where you're getting just a slow crawl higher, that could indicate another sell-off there. But even at that point, that 42K zone is going to be that major level that I do need to see break in order for me to basically completely shift my trend and completely shift my mindset for my view on BTC. Because if we look at it right here, let's draw the trend line, I guess, just because it's a little bit bigger. This zone right here, we still see it holding really well, one of our 3 trend lines. And we were expanding and increasing volatility overall, making higher highs, although this did not reach the high that we were expecting there. But overall, we were expecting some level pullback to continue this expanding wedge, and then inevitably we were expecting it to fall or drop. Let's just take a look here. So this was my first expectation, is we were going to be squeezing towards this zone here, and then we would be coming to some sort of conclusion, whether it's going to be a slight move to the downside, and then you're going to get a nice structure forming building here, and then you're going to move to the upside. Or what else you could see is obviously what we found out for the second option, is we do take a deeper dive, and what I'm ideally looking for would be something like this, maybe, where you're able to get something like what Cardano did, where you see like this major level for Cardano. It was $1. You initially hit it for a resistance, and you pop back up, and then you kind of continued moving higher, and then you got its major slam down back in March, and then you form like a descending wedge. You could dump down a little bit below here, but this is what you'd be looking for, and then that's going to be your continuation pattern to move higher. So I am still looking at this as a continuational push. I don't mind if we do see a little bit of trading within this low that we're seeing right here. That's why I'm going to be remaining patient, but it would be great to see some sort of structure here. We're going to get descending, like somewhere like this, and then you're able to draw a nice structure, something like that. Or even if it's going to be very bullish and it just recovers very quickly, you're able to get some sort of ascending structure like that. But I don't think at this point it would make sense to assume that we're going to have another major move, because look at that capitulation volume that we've seen. Usually you don't see the massive move after a major capitulation event. For example, you see major capitulation events here. Like there could be a significant amount of buy volume or sell volume coming in the future, but you just comparing it to the previous 6-hour candles, we really don't see many days where we've seen more volume. So this is a capitulation phase, and in my personal view, I do not think that we'll be just aggressively pushing. So the next video will be somewhere kind of within this range here, and it will start to look like a great formation, and that's where we're going to be looking at the market potential entries. So that's going to be my view of BTC. We're going to jump into the Bitcoin dominance chart here. Let's open that guy up, and let's do a quick draw here to understand where my potential levels of supply are. So looking at this zone, we see a significant spike in the Bitcoin dominance, which makes sense because when Bitcoin dumps, a lot of alts are going to follow Bitcoin. As we have seen, there are some alts that are going to kind of carve their own path, but the majority of alts are going to follow BTC. So when BTC dumps, this usually pumps, and we saw a big candle here. It did get basically rejected all the way back down to this little range that it's currently in right there. But as of right now, because we are seeing quite a bit of sell pressure in Bitcoin, I'm expecting a lot of alts to come back deeper than where BTC is in terms of percentage, which is going to reduce the market cap greater than Bitcoin. So then looking at it from in accumulation to all the different alts that is creating the BTC.D chart, it is going to be creating a little bit of momentum here for the BTC.D chart. So I am going to be looking at this major zone basically at 44 and a half. Let's just get this draw right here. This is around the range that I really am expecting, maybe like 43 and a half, sorry, to 44. This range around here is going to be, in my view, the major zone of supply, and the reason is you see this initial zone right here. You see the previous key level of supply turn into a new level of support. You have a nice zone of confluence here, and you have this key descending zone that is probably going to be breaking. I wouldn't be too surprised. So then we'd be looking for a potential structure that looks something like this for the next potential move to the downside, something like that. So that's what we're going to be looking for BTC, is some sell pressure coming in, or at least consolidation in Bitcoin, which will slowly push the Bitcoin dominance market cap to the upside, or the Bitcoin dominance chart to the upside. And then we're going to be looking for a slight consolidation, and then we are expecting a further continuation down for this chart. But I'm not going to be all worried if we do break this initial descending zone there. So that's going to be my view of the BTC.D chart, and I think now is going to be where I guess more like the fun's going to be taking place. So we'll be looking at this chart right here initially, which is going to be, like I said at the beginning of the video, going to be comparing Bitcoin, which is this top line right here. And then you have your S&P 500 in the second spot. You have the TLT, which is a 20-year bonds. And it's basically an ETF of the value of the bonds. And then we'll be taking a look at the actual yield that the bond is able to generate for investors in the final set of charts that we'll be taking a look at to end this video. And on the bottom, you have the DXY, which is the US dollar currency index. So there is a negative correlation between two different pools. The first pool being risk on assets, and that's going to be the S&P 500 and Bitcoin. And then you have risk off assets, which are going to be the TLT chart, which is the bond value, as well as the US dollar index, which is the DXY, the bottom orange one there. So we've already taken a look at Bitcoin. I do think that we are pulling back after the strong bullish push to the upside, and we are going to continue the overall momentum. So we'll be taking a look at the S&P after this chart actually. They'll be squeezing one more in there. Taking a quick look at the S&P, making sure that we are still looking solid, because that is in the same pool, in my view, as Bitcoin for risk on assets. And then we'll be ending off the video looking at the bonds, which have been in a downtrend, because as we clearly have known, the S&P and BTC have been in a very strong uptrend since around the fall, early winter of 2020. That's when we really start to see a lot of momentum down for both DXY and TLT. So we'll be taking a look at the S&P just to kind of understand where it's at. It does look extremely overextended. I very much understand how it looks, but the amount of money printing is insane, and I think a lot of people are getting hooked up on the idea of market caps being too large. But if you print the amount of money that the United States is printing and injecting it into the economy, especially in the financial sector, it makes sense that the market caps are going to be increasing. It just, the numbers are not going to be making sense to an individual who is used to pre-global financial crisis numbers. In my personal opinion, I think they are going to be skewed, and it's just going to get even greater in the future. So being a little bit more open-minded about that would be a beneficial characteristic for a person to have. So we'll be taking a look, in my view at least. So we'll take a look at the S&P here. And the S&P actually has two different charts to it. It has the S&P and the NASDAQ 100, which is the NDX. And they both look pretty bullish. I will mainly talk about the S&P, but the tech stocks in the NASDAQ are even more bullish than the S&P, as we can clearly see just ascending wedges that are just squeezing to the upside. Extreme speculation and optimism, hope in the air in the market for NASDAQ tech stocks in the US. Pretty crazy. So looking at the S&P here, we are on this nice little table just above this previous high here. And on a larger time frame, let's just zoom out a little bit and to something like that, and we can get our drawer on the screen to talk about what we currently see in front of us. So this big line right here was the expanding wedge. We're taking a really large time frame back. We saw something like this, and then we were able to make a rally back up, and we were able to break this zone. And this line right here is this line right here. And this entire move, kind of from the breakout to where we currently are right now, is expanding like that from this major wedge. So that's currently where we are on a large time frame. And on a smaller time frame, we can just continue this draw here. We have this ascending zone that was initially connected by higher high here, higher high here, higher high here. We could extend this. I think it's because it's not in log mode, but basically you can connect the higher highs and you have a nice ascending zone above here. And then for the lows, you have these lows right here. So you have this expansion in the price action in terms of volatility, and then it just kind of fizzled away within the middle of this zone, holding this splitter perfectly. As we can see, it held the zone multiple times, 1, 2, 3, 4, and we were actually holding this resistance as well. So we were in a nice channel where we see the key levels of support and key levels of resistance. That's not the arrow. Right around here, here, and then we'll talk about the head and shoulders formation that we saw within here next on a smaller time frame. But on just sticking on a larger time frame, if we are able to squeeze above this zone, because we've been trading within this range for quite some time, if we are able to break out of this zone, hold this current level of support, and then continue to trend higher, I think it would be extremely beneficial for the cryptocurrency market, because the risk on sentiment is going to continue. Now, if we do fall, we'll talk about it on a smaller time frame, but we do have some supports that we'll be looking at that probably has a high or does have a high probability of holding, because of the fact that we've seen the Biden mentality basically cemented in US investors. Because really, if central banks are going to be halting the next crisis because they don't want it on their hands or their watch per se, they're going to inject so much liquidity in the market that will make a massive impact, like we saw during the slightly post-COVID, like in summer. I was expecting a pretty big downturn, but I was proven wrong because of the central banks, and now I have a newfound respect for the power of central banks in terms of market manipulation. So on a smaller time frame here, we see the nice head and shoulders. We're going to do another quick draw on this time frame, and if you haven't seen, this is a nice head and shoulders here. This is the left shoulder, this is the head, and we were seeing a potential right shoulder, but we were basically just blasting off above this previous left shoulder, and we broke above the head, pull back, and then continue to move higher, all while holding this ascending ascending resistance really well. And in my view, it does look like we have tested, pulled back, squeezed, and then pushed above this zone, retested, and it does look like we are seeing a little bit of a slip back into it. But as long as we're trading within this range, it does look like it's pretty solid and has the potential opportunity to break to the upside and continue the overall trend that it's been seeing. So when I would be wrong, in my view, is not if we break this current level of support. I still would be totally fine even if it did kind of do something like this, where we're getting a nice pullback, something like that, and then we're able to get a continuational pattern to the upside. It would be a lot more worrying if we break below this major level of previous support and previous resistance right around here, because if we do that, then we're going to be trading back into definitely this range, because it's breaking market structure. This is a major higher low from this low right here. So, at that case, we could then be looking for a little bit of reduction in our exposure to risk on assets, because if the S&P is falling, I do not think that Bitcoin will be doing phenomenal. Has happened before, but usually risk on assets, if it's major fear, major uncertainty, we saw in COVID, basically everything went down except bonds as well as the US dollar. So that's going to be my overall view of the stock market. It does look very bullish, with it breaking, peaking above, or poking its head above this current level of resistance. It is kind of hesitating to continue to the upside so far, but we're seeing a nice contraction in the volatility. If it does break to the downside, I am going to be looking at this around 44.75 zone for the next major level of support that I do think will hold, because we have seen the price hold really every single time so far. It's taken a pretty big dip to the downside, and we do see, if we are kind of extending this zone a little bit wider, you do see that area of buy pressure extending above here. So let's quickly get our rotated rectangle. You do see that level of buy pressure coming into the market from the series of highs that are holding. So we do know that there is a lot of buy pressure coming in somewhere around there, with this key level right here and this key level right here. That was a pretty poor line. There we go. So if we go and trade something like that, I definitely do not mind. But if it starts to break but beyond this ascending zone, that's a time to be a little bit worried. So I'm viewing this zone right here as the key zone of confluence. All right, so that's going to be my view of the S&P 500. We'll then look at our final chart, which is going to be the view of basically, I guess, U.S. assets, I guess you could say, in terms of their currency as well as their treasuries for the bonds. So this is going to be the view right here. I'm just going to be pulling it over. So you got three different charts here. You got the US dollar, you have the actual bond value for the 20-year treasury bond ETF, and then you have the yield for that 20-year government bond. So these are going to be directly negatively correlated, the yield and the value, because if the value is going up, the yield is going to go down. If the value is going down, the yield is going to be going up. Basically, is a completely negatively correlated relationship there. And the US dollar is going to be somewhat similar to the TLT chart, but not exactly. So when we're looking at these three different charts here, ideally, let's just take a quick picture here. What we're looking to see from a bullish case in crypto is to see the US dollar push to the downside, where we see this nice ascending wedge that has broken. You see the nice splitter there, has broken, retested. We're looking for it to hold before its continuation will push to the downside. We do see a contraction here for the TLT chart. We've already broken this slight ascending zone right here, but really what we're looking for is a break in the 145 range, which is this guy right here. Once it breaks that zone, it has, in my view, let's just get that screen on again. In my view, that would be the validation that both the DXY is on its trend down back to its previous low, and the TLT chart is topped from this squeeze, and it's now going to continue its trend to the downside here until it's going to be hitting its next key level of resistance at around 135 to 134. And ideally, that's what we're looking for. And then you're going to see, if this does come into fruition, you're going to see something like this for the yields, because if this is going down, ideally, in our case, for the bullish case, we are going to be seeing the yields rise for the government bonds there. And it does look like it's coming into fruition here. We will look at this on a smaller time frame because this is basically already played out. Let's not look at that one just yet. We'll be taking a look at this one. You see that first strong impulsive push to the upside. You're getting that pullback. You're getting that retest and the validation that there is sell pressure for the US dollar. And as long as we're holding below the 93 area for the US dollar, I am still expecting this to sell off and continue to the downside here. For the TLT chart on a smaller time frame, the major zone, like I did say, is around 145. You got the ascending zone, you got the horizontal zone, you got the key levels of both resistance and support again, and then you're getting a series of lower highs right here, pushing the price towards the apex of the structure, which is basically right at 145, and I am expecting this to push to the downside, which would then create an ascending structure breakout for the yields, which would just play out absolutely perfectly. So that is really the main charts that we're going to be looking at for this video. I really hope you enjoyed it. If you got anything from this video, if you thought it was educational, informative, entertaining, it would really mean a lot if we do get some likes. Our subscribers have been definitely pretty well compared to the previous months and years that we have been running this. But definitely, if you are getting some value, it is much appreciated. So thank you very much for tuning in. And until next time, have a good one, traders.